Hello, this is Alex Kazmark for the FXEdge.com, and this is the free daily Forex video for September 9th, 2009. One reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Well, traders, after 4 days of solid gains, it seems that the market has finally confirmed the recent breakouts that we've seen. As much as we'd like, we can't expect a dollar rally at this time against most of the majors. Now that the market has regained some of the risk appetite, we will most likely continue to see an extension of these recent gains higher. We're still expecting economic data to lead the majors, and we're also expecting profit taking at any sign of risk aversion. So at this time, we're going to go ahead and cover the support and resistance levels. We're currently looking at the euro dollar on the daily, trading at 144.92. We went up as high as 145.33, breaking through that 144 level. That was a level of resistance. We've also closed above the 144.50 level, which was another point of resistance. With that being said, we now expect a run higher towards the 147 mark. First level of resistance is going to be yesterday's high at 145.34, followed by 146, 146.80, 147.12, and 147.75 if it gets that high. First level of support for the euro is going to be found at 144.50, followed by 144, 143.50, and 143 even. Below that, we have support at 142.20. Moving on to pound dollar, currently trading at 165 even, extended almost as high as 166. As you can see here, I always point out these fulcrums at the 20, 50, and the 80 level. 65.80, right there, we saw a nice bounce off of that level, and we closed near the 165 mark. If the pound continues to go higher, we're going to find resistance at 165.41. This was an old area of resistance here. This might not be as significant as 166. Consider 166 the more significant level, yet we may find some sellers of the pound at 165.40, 165.50 area. Above 166, we're going to see 166.23. Above that, we have 167. Above 167, we can see as high as 167.80. The dollar can find support at 164, is going to find resistance at 164.20. In other words, the area of support for the pound is at 164.20, followed by 163.80, 163.20, and 162.80. Below 162.80, we have 162.34. The pound has been quite mixed. We've lost a lot of gain. We lost a lot of value against the euro as well as the dollar, which is why we haven't seen much of a range as we've seen on the others prior to this recent breakout. As you can see, ignore the red lines. But as you can see, we had a nice dollar rally to the 61.50 mark. Couldn't break through the 161 level, and with recent rallies against the dollar, we're now seeing a rally for the pound as well. The question here is how much of this rally is going to continue for the pound as the UK also continues to pump more money into the economy, and that was the major story keeping pressure on the pound. So we'll see over the next few days how this plays out, and of course handle that accordingly. Next up is the dollar yen trade, currently trading at 92.28. Equities were up today, yet the dollar lost quite a bit of room and closed near the 92.20 area. Not much correlation to the equity markets today, but we'll have to see if this 92 will hold. Hopefully, if the markets continue to rise, we can see a higher lower pivot. This being the first low pivot, and this being the higher lower pivot. Of course, we have to wait to see what happens with today's candle. but that would be a good sign of a not only an equity rally, but a dollar rally against the yen as well. First area of resistance for the dollar is going to be found at 92.80, followed by 93.30, 93.80, and 94.50. Area of resistance, first area of support is going to be found at 91.83, followed by 90.90, 89.80, and 88.57. So once again, area of resistance for the dollar is going to be at 92.80, 93.27 or 93.30, 93.80, 94.50. Above 94.50 we have 95 even. First area of support for the dollar is at 91.80, 90.90, 89.80, and 88.60. If we break this 92 level, we do expect the dollar yen to continue heading south, perhaps aiming towards the 87 level. However, since we're quite far from that, we won't cover those areas just yet. Next up, we have the dollar Swissy. In the members section, we've been talking about our short trade, and today we're going to lock in many more pips after following this large move. First area of support, by the way, currently trading at 104.63, and the first area of support for the dollar Swissy is going to be found at yesterday's low of 104.30, followed by 104.11 and 103.64. These areas are very I don't want to say insignificant, but these are wicks going back to December of last year. We never really closed below this level. So now that we've closed below the 105.50, this is very bearish for the dollar. We do expect further losses down to the 103.60 level. The dollar can find resistance if it does start to gain ground at 105.27, 105.50, 105.80, and 106.30. Above 106.30, we have 106.50. The 105.50 level is going to be very major. As you can see, we had many dollar buyers here at the 105.50 level for many days. Now that we've broken below that, cleared a lot of stops, we can see all of this area turn into resistance now. So with that being said, we do expect the dollar to lose ground, but in case there is profit taking or in case things change, 105.50 is going to be another key level of resistance for the dollar. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for September 9th, 2009. And until tomorrow, good luck trading.